Welcome back to the Deep Dives, where we try to cut through the noise.
Get straight to the insights.
Exactly. Today, we are plunging headfirst into well, the pretty dynamic world of cryptocurrency.
Always dynamic, isn't it?
Huh, yeah. Specifically, we're looking at Bitcoin's recent movements and the wider crypto market, too. It's a landscape that shifts so fast. It leaves a lot of us just trying to keep up, wondering what's really driving these big swings.
Absolutely. And the speed means understanding the why is just so critical now.
Right.
So our mission today really is to help you understand that recent volatility. We want to unearth the forces, often these interconnected forces at play. We'll focus on Bitcoin's price, sure, but also how these shifts ripple out.
That's the plan. And for this deep dive, our main source is an investing.com article from August 27th, 2025. The title gives us away. Bitcoin price today edges higher to $111 3K after 7WK low amid Fed worries.
A lot packed in there.
Yeah, and our goal isn't just reporting, it's extracting those key insights, connecting the dots, trying to give you a clearer picture of what's happening underneath it all.
Let's do it.
Okay, let's unpack this. So, Bitcoin's recent roller coaster ride. Let's start there.
Good place to start.
As of Wednesday morning, August 27th, around 9:35 a.m. Eastern Time, Bitcoin was trading like 1% higher, around $111,300.
A slight gain.
Yeah, slight. Sounds okay on the surface, but it's the story before that small rise that really grabs you, right? What happened just before that?
Well, that's the key context. This modest gain came right after a pretty significant dip. Bitcoin fell to a 7-week low.
Wow.
Yeah, it went below $109,000 just the session before. It's a perfect example of how fast sentiment can just pivot.
And what caused that dip? Was it just general market jitters or something specific?
The article points to something specific, a significant whale trade.
Ah, the whale. Okay, maybe just quickly, for anyone maybe less familiar with the crypto jargon, what's a whale and how can one trade make such waves?
Sure, yeah, good question. So a whale is just an individual or maybe an entity holding a massive amount of a specific crypto, like Bitcoin in this case.
Right.
Their holdings are just so large that any big move they make, buying or selling, it can seriously move the market price.
Okay.
And the article mentions the liquidation of 24,000 Bitcoin tokens.
24,000, that's huge.
It's huge. It's not just a big trade. It's like a very deliberate offload by someone with a lot of market power.
So what happens then when a whale dumps that much Bitcoin? What are the immediate effects? Is it really shockwaves or is that just, dramatic language?
Oh, yeah, definitely sends shockwaves. Think about it. 24,000 Bitcoins suddenly hitting the market.
Yeah.
That creates massive selling pressure, right? It's like a flood of supply, and the demand just isn't there instantly at the old price.
So the price has to drop.
Naturally. And then you get this cascading effect. Other investors see the price falling fast. They might panic, sell their own Bitcoin.
Making it worse.
Exactly, pushing the price down even further. So yeah, that liquidation played a really big role in pushing Bitcoin below 109K.
And putting that in a slightly wider context, the article mentions Bitcoin had already pulled back, more than 10% from its August peak, above $124,000.
That's right.
Erasing a lot of a rally that was built on, very different hopes. What were people hoping for back then?
Yeah, good point. That earlier rally, through a lot of August, it was mostly fueled by this growing feeling, this confidence that the Federal Reserve was about to pivot.
Towards rate cuts.
Towards rate cuts, exactly. Lower interest rates generally make riskier assets like crypto look more attractive. Borrowing is cheaper. Traditional stuff pays less.
Right.
So when a whale trade like this hits, it doesn't just create direct selling pressure. It also sort of shatters that positive feeling, reminds everyone how fragile the market can be.
And how susceptible it is to just one big player.
Precisely. Even a powerful individual actor.
It really drives home how fast sentiment shifts, doesn't it? 1 minute you're betting on rate cuts, the next, boom, one big trade sends things tumbling. And for you, our listener, this isn't just abstract market stuff. It's a reminder that even in a supposedly decentralized market, a few big players can still have huge influence.
Which creates vulnerability for everyday investors.
Yeah, and it kind of challenges that whole democratic finance idea sometimes associated with crypto.
That's a really critical point. If one whale can wipe out a rally, what does that say about, wealth concentration in crypto, despite the decentralized tech?
That's the $1 million or maybe $1 billion question, isn't it?
Yeah.
It suggests that maybe the technology is decentralized, but the assets, the influence, still quite centralized sometimes.
Leads to that volatility.
Which brings us neatly to other external factors causing volatility. Let's transition to one of those big Fed worries mentioned in the headline, the attempt to fire Federal Reserve Governor Lisa Cook by President Trump.
Yeah, that definitely grabbed headlines and shook things up. And what's interesting here, I think, is it's not just politics. It really touches the core integrity of the financial system.
How so? What are the specifics here?
Well, the allegations against Governor Cook are serious. Mortgage fraud, misrepresenting home ownership status on loan documents back in 2021.
Okay.
And according to the source, investing.com, these were referred to the Justice Department by the Federal Housing Finance Agency.
That sounds very serious.
Yeah.
How did Governor Cook respond? This seems like a major legal fight.
It absolutely is shaping up that way, and it's really crucial to get the counter-narrative here from the article. Cook flatly disputes the allegations, calls them baseless.
Okay.
And her lawyer, Abby Lowell, he's announced plans to sue the administration. He's arguing the dismissal was unlawful, that it violates the Federal Reserve Act.
Ah, the Federal Reserve Act. What does that say?
Well, he points out, and it's a key point, the act says governors can only be removed for cause, which is a very high legal standard.
Designed to protect the Fed's independence.
Exactly. Protect it from political interference.
So, okay, bring this back to the markets. How does a political battle over Fed independence actually, quote, dim risk appetite and make markets reassess interest rate trajectories? What's the link?
Right. So when the independence, the stability of an institution as crucial as the Fed gets questioned,
Investors get nervous.
very nervous. They tend to pull back from riskier assets, crypto included, and look for safer places to put their money. Fed independence is seen as like a cornerstone of economic stability.
Insurance policy is based on data, not politics.
Hopefully.
Ideally, yes. So
Yeah.
any challenge to that injects huge uncertainty. Markets then have to scramble to figure out what this means for interest rates.
Oh, so?
Well, does the political turmoil maybe force the Fed to cut rates sooner to calm things down, or does it create so much instability that they can't make any moves right now? It becomes very unclear.
So you get this dual impact mentioned in the article, maybe a higher chance of near-term cuts, but shadowed by this long-term uncertainty about the institution itself. Precisely. It's complex. You have this immediate reaction, maybe pricing in cuts, but overlaid with this deeper worry about institutional integrity and the ongoing legal stuff.
Wow. It's a powerful reminder, isn't it? How these political tremors directly hit our wallets, even in digital assets. For you, the listener, this really shows how political actions, challenges to norms like Fed independence, they have direct, complicated impacts on markets worldwide. Affects everything.
From government bonds to Bitcoin.
Shows that economic stability isn't just numbers. It's really about governance, trust, and institutions.
You got it. You can't just watch the charts. You need the whole picture. Politics, policy.
Right. And while traditional finance was dealing with that drama, the crypto world was, well, doing its own thing, forging some new, maybe surprising alliances.
Always innovating, or at least always moving.
Yeah, so let's shift gears from DC to a really interesting partnership. This involves Trump Media and Technology Group and Crypto.com.
Yeah, this one is fascinating. Really shows the expanding reach of crypto, pulling in players you might not have expected.
So what do they announce?
They announced a new venture, a SPAC-backed crypto treasury firm.
Okay, SPAC-backed crypto treasury firm. That's a bit of jargon. Can you break that down for us, even for our audience who follows this stuff? Maybe not every acronym.
Sure, happy to. So SPAC first. Special Purpose Acquisition Company. It's basically a shell company, a blank check company.
Right.
Raises money through an IPO just to buy a private company later, taking it public faster than a normal IPO.
A shortcut to listing, basically.
Pretty much. Then a crypto treasury firm, in this context, is a company whose main job is managing a portfolio of digital assets, like these Chronos tokens we'll get to, growing that digital wealth.
Okay.
So put it together. It's a publicly traded company brought to market via SPAC, focused on holding and managing crypto.
Got it. So a public company for crypto asset management. What's the main goal of this specific venture?
Well, what's really interesting is its primary goal, accumulating Chronos tokens, CRO.
Ah, Crypto.com's token.
Exactly. It's not general crypto investing. It's very targeted. The venture's called Trump Media Group CRO Strategy.
Catchy.
Maybe. And it's being structured as a merger with Yorkville Acquisition Corp, aiming for a NASDAQ listing.
And the funding sounds huge. The article mentions, what, reportedly $1 billion in CRO tokens?
Yeah, plus $200 million cash, $220 million in warrants, and this massive $5 billion equity line of credit from a Yorkville affiliate.
Wow, $5 billion line of credit. That's not messing around.
Yeah.
What is that kind of backing signal?
It signals a really aggressive, probably long-term strategy. That scale, especially the credit line, suggests they're serious about building a major treasury of CRO.
So a big bet on CRO's future.
Seems like it. A strong belief in its value, its utility within the Crypto.com ecosystem, and maybe broader plans for Trump Media in the digital space.
And it wasn't just Yorkville funding it, right? The article mentioned commitments from both Trump Media and Crypto.com.
That's right. It's a two-way street. Trump Media plans to buy nearly $105 million in CRO tokens itself. And Crypto.com will invest in Trump Media equity. So they're aligning their financial interests, really cementing the partnership.
Mutual skin in the game.
Exactly. Shows deep commitment from both sides.
So the market reaction. How did people respond to this somewhat unusual alliance?
Well, pretty predictably, after the announcement, the CRO token price jumped significantly.
Positive reaction.
Very positive. This kind of high-profile deal often validates a token's potential for many investors. And it wasn't just CRO. Trump Media shares, DJT, they jumped too.
Interesting. So the traditional market saw potential there as well.
Seems so.
So for you, our listener, this is maybe a key insight. These strategic partnerships, especially with established brands or public figures entering crypto, can really create new dynamics for specific tokens.
Definitely shifts the landscape.
Yeah, it shows crypto evolving, doesn't it? Moving beyond just being a store of value or whatever into things like brand-backed treasuries. Makes you wonder if this is the future of mainstream adoption brand integration.
It's a really powerful example of how the crypto narrative is broadening, pulling in elements from traditional finance, media, celebrity culture, often in unpredictable ways.
Okay, so we've covered Bitcoin's dips and climbs, the Fed drama, this new CRO venture. Let's zoom out a bit now to the wider altcoin market.
Good idea.
Because while Bitcoin was choppy, the article said most altcoins actually gained on Wednesday after falling the day before. What does that tell us? Are they decoupling or just reacting differently?
That's a great observation. Bitcoin is often the bellwether, it sets the tone.
Right.
But its moves don't always map perfectly onto everything else. Altcoins, basically any crypto other than Bitcoin, often have their own unique drivers.
Like what?
Tech developments, ecosystem news, specific narratives. Take Ethereum, for example, world number 2 crypto. It rose 1.9% to around $4,589.
Okay.
And that came after it hit a record high, nearly $5,000 earlier that week, probably driven by stuff happening on its network, anticipation of upgrades, that kind of thing.
And Ethereum wasn't the only gainer. XRP, number 3, was up 2.8% to nearly $3.
Solana jumped 7%. Cardano up 1.5%. Polygon 1.7% higher. Sounds like a pretty good day for a lot of the major alts, despite Bitcoin's recent struggles.
Yeah. And each often has its own story. XRP is often tied to regulatory news, its use in payments. Solana, Cardano, Polygon, they're all platforms competing on speed, cost, scalability.
Layer 1s and Layer 2s.
Right. So their gains might reflect growth in their ecosystems, new apps launching, positive tech signals. It just highlights the diversity here. Different sectors can do well independently, even if the overall mood is linked.
What about the more speculative side, like meme tokens? Did they join the party?
Yeah, even the meme token saw some action, often driven more by hype and social media, not fundamentals.
Sure.
Dogecoin was up nearly 3%, and maybe tellingly given our earlier topic, the Trump Teal token mentioned in the article rose 1.2%.
Interesting.
It just further illustrates how diverse things are. Meme tokens especially can react to totally different things, sometimes completely detached from broader economics. Shows a variety of drivers in crypto. So for you listening, this really shows how market sentiment, while often led by Bitcoin, plays out differently across this huge altcoin ecosystem.
It's not a monolith.
Not at all. Different tokens react to the same big forces, but they also have their own stories, their own tech, their own communities driving them. It means a deep dive like this, you can't just look at Bitcoin. You need to see the whole complex tapestry.
Exactly right. You need the whole picture, tech, innovation, regulation, politics, even celebrity deals now, it seems.
Which brings us towards the end of this particular deep dive. We've really seen today how things like high-stakes political moves, worries about Fed independence, can connect directly with, innovative crypto ventures like the Trump Media Crypto.com deal. These things that seem separate, along with big individual trades, they all feed into these complex, sometimes wild price movements in crypto.
Yeah, I think the takeaway is that understanding crypto now means looking way beyond just the price charts. You need a real appreciation for how global events, political, economic, corporate, ripple through this whole financial ecosystem. Every action has a reaction, creates new dynamics. It's constantly shifting.
It really is. And that leaves us with a final thought for you, our listener, to maybe chew on as you watch all this unfold.
Okay.
Given these powerful forces we've discussed, challenges to old institutions like the Fed versus these new, maybe less regulated digital alliances like the TrumpCrypto.com one, where does future financial stability actually lie? Is it in the resilience of the old guard or the agility of the new digital frontier?
That's a big question.
It is. As these currents clash, what fundamental shifts do you think these events signal for the future stability, the regulation of the global digital economy, and maybe even for our whole idea of trust in finance? Something to think about. We'll see you next time on The Deep Dive.